Hey traders, welcome back. Today is Sunday evening, December the 19th, 2021. We're heading into the last 2 weeks of trading for the month. Always a little bit of a scary time to trade in the marketplace. We do have a shortened trading week this week. These last 2 weeks of the trading year, we tend to have very light volume, and that very light volume can be the catalyst for a lot higher volatility. And of course, we've got a lot of volatility going on right now in the marketplace. This week, we're looking at basically an expected move of around 87 points for the S&P 500. That's versus about a 72, 73 point expected move last week. We pushed through the expected move last week, by the way, but 72 point expected move last week versus about an 87 point expected move this week. And of course, that's on a shortened week. That's without Friday's trading session. So there is definitely a chance that we're going to get some volatility here this week with even a one-day shortened time frame. It is interesting if we look at the VIX, the volatility index, it's not really reflecting any of that fear. It's absolutely just hammered down here. We did have a little spike, obviously, last week. We did a short volatility trade on that, and that was a nicely profitable trade for us. But let's get into our trading. Let's look at our open positions, and then we'll get into the week ahead and what we're looking to trade. It is going to be a busy week in spite of the fact that it's a shortened trading holiday week for us. We did have a lot of positions that Thursday and Friday were good days for us in the week last week. We had some nice profits on Thursday. On Friday, we were able to book some additional profits, and then we had quite a few positions that just expired fully profitable on their own on Friday. Plus, we had a nice zero DTE trade on Friday as well. But we do still have quite a few positions carried over from last week. Let's go through those again briefly, and then we'll talk about the week ahead. We've got two leap covered writes. One is a put and one is a call. So one is bullish and one is bearish. These are both been performing quite nicely for us. The Apple trade, again, based on our technical analyses, we just thought it was a little overextended over here, and so we put on a bearish trade. That's sort of come to fruition for us here. It's moving nicely into the profit zone. It's been cash flowing quite a bit. We need our cash flow position on it, our covered put position on it last Friday expired fully profitable. So we need to redo that this week. And again, we're looking at something, again, it would be 4-day expirations that we're working on this week. The 167.50 would bring in almost $190 additionally on that trade. And again, if we can bring in $150 to $200 a week on this position, this is about a $6,000 position. But again, if we could bring in $500 to $800 a month of cash flow on that, it could end up being a very nice trade for us. Futu is sort of in the same category. We had our cash flow position on this, our covered call. Futu is a bullish one. Apple is a bearish one. That expired fully profitable for us as well. So we need to come back and cash flow this going forward. Also, if you look at our Futu position in the history tab, just take a look at it here. And we eliminate, let's get these highlighted. And then let's eliminate our purchase of the leap. You can see we brought in about $240 of income on the trade so far. So we'll continue to cash flow that one as well. WORN is a little interesting position here. This is Western Copper and Gold. Very, very low price stock. $1.40 is all it's really selling for here. It does have a sort of an interesting storyline behind it. It is somewhat of a meme stock, pretty high short interest in it, and it has popped nicely from time to time here. We'll continue to let that play out here, but I've got a whopping, there's obviously no option play in that. It's just a purely directional trade, and I'm dollar cost averaging into it. I've got a whopping $194 into it right now, and I could see myself ramping up to about an $800, $900 position in this. So every time it dips just a little bit here, I add 5 or 10 shares. Very small position here. Lithium, we rolled that down. Basically a wheel trade, cash secured put trade, rolled it down to the $20 mark. There's a couple of ways to play lithium, and I want to get long lithium in this marketplace. I think it is a little bit non-correlated to the overall market, and of course the supply-demand story there is pretty impressive. But the question is just what price is a good price to get in at. It's obviously been in a very bearish trend here, and we're getting right down here to this next level of support around 22.50. So we'll see where that goes, but I do think that I would like to own 100 shares of this, and I think we had a price at either 30 or 25. We've rolled that down here to 20. I think that's going to be a better entry point for us. Peloton was sort of an interesting play. We've had a couple of sort of pandemic plays here that absolutely exploded when the economy closed, and then they've collapsed as the economy has opened back up again. And now we're trying to do a little bit of bottom fishing on these. Peloton has just been absolutely taken to the woodshed and beaten up quite severely here. There was earnings there, and it's just continually drifted lower. But it is interesting here with the challenges that we've had over the last week in the marketplace. Peloton has actually held up pretty nicely. Market was obviously down again on Friday, and we had a nice solid day on Friday as well. So we might be there to where we're finding the bottom. We're looking at the 36.50s, and that's a nice trade for us, even if it doesn't work. Obviously, if we're not assigned yet, we only have to put up a marginal amount for interest, or a marginal amount of capital for doing the trade. $390 is the committed capital, bringing in 137 in income. So the ROI on the trade would be amazing, whether we got really assigned or not. FXI is a little bit different story. It is obviously China. And one of the interesting news bits here that will be interesting to see how it plays out today. We just got news here Sunday evening in the U.S. Sunday evening that China's loan prime rate was just dropped just by 25 basis points. Maybe not as much, not cut as much as maybe some of us had hoped for, but there was a cut there in that by 25 basis points, and that's accommodative. They're trying to reinflate their economy there. And let's see what that will do with FXI tomorrow morning as the market opens up. We've got a cash secured put in here at 37, and there's a trade coming through right there. We've got a cash secured put at 37, and it's at about 36.30 right now. So again, there's nice cash flow potential on this trade. If we go out a month and look at it, you can see that the premiums on these are pretty healthy in this range. So again, I'm going to probably let that continue to work for a little bit. EXAS, this is Exact Science Corporation. Now this one is a little bit different in that we are really quite well positioned in this trade. If you look at it in the curve, we're still nicely positioned in the trade, but we've had a lot of IV pump into this trade on Friday. And so even though the trade still looks solid for us, with this IV inflating here, it has really pumped up the premium cost on it. So we still look good on the trade, even though our P&L doesn't look that great. We are in the profit zone. We got 4 days to go on this. And again, credit strangle on that trade, undefined risk trade. Looks pretty solid. Zoomed on Friday. Once again, that's a little bit like our Peloton trade. It is one of these pandemic trades that exploded when the economy closed, collapsed when the economy opened back up again. We're trying to find a bottom in here. And again, on Friday, with the market getting beat up pretty strongly, we see that Zoom has really held its bottom down here. It's had a good support level, and it actually started to get a little bit of a buy signal kicking in on Friday. So our trade right here, it does expire this coming Thursday, December the 23rd. Looks really solid right now. Very juicy premiums on that, about a 17% ROI on this trade should it come to fruition for us. X is our full iron condor. It's plugging along. You know, it's really doing everything that we could possibly ask it to do. It's really just sort of chugging along in this support resistance area, doing everything that we need. It was a longer term trade. It was about a month-long trade, and we're down to 12 days in that. It's chugging right along, doing everything that we want. DWAC is a trade that we've had to adjust and roll, so this is sort of a second or third iteration of this trade, and it's performing quite nicely for us. It still looks really solid. Now, what we have in place right now does expire this Thursday, but it still looks good as a trade, and the ROI potential of what we have left, in other words, we've got about $1,400 tied up in the trade. There's $156 of extrinsic still left in it. So it still merits holding, in my opinion, at this point, and I'll continue to hold that. I don't know if we're going to hold it all the way to Thursday's expiration, but we'll see. W, another one of these pandemic stocks that absolutely exploded to the upside when the economy closed, collapsed when the economy opened back up. We're trying to find a bottom of it in here. And again, much like Peloton and Zoom, even though the market was really getting hammered on Friday, this thing had a nice day on Friday. And it again expires this coming Thursday. And at least for right now, we look pretty secure, pretty safe on that. We might have the opportunity on Monday or even as late as Tuesday to go ahead and book our profits on that trade. It looks really, really solid right now. And even at today's rate, it would almost be a 10% return if we were to close it out right now. There is still a little bit of extrinsic value left in it, but it looks really solid. We've got our Ford ETE that we rolled from Friday's expiration. We rolled that down just a little bit. We rolled down from, I think, 462 to 461. Did it without having to add too much buying power. You can see the futures right now are down about 50 points. So that means very much high likelihood that we're going to need to roll this again. I would like to see if we could get a call leg in on the trade on Monday to bring in a little bit of credit and help that out. But we'll continue to work that trade. We've done this. We've been here before, and we've talked about the SPY trade on Friday. And I did say that really probably our next area of support is going to be this white line, that 200-day moving average. That's 451. That's 10 points down from where we were, where we closed on Friday. If we do open up down 50 points, well, that's half of it. That's half of the 10 points. So we're halfway there to that next support level. And so we'd anticipated that. We talked about this on Friday, and that it may necessitate 3 or 4 more rolls to continue to get down to that 200-day moving average. But I do look to hopefully have some support there, and that's the area that I would look to roll it down to. RES trade. So tonight, Sunday evening here, December the 19th, we did put on, if I look at my activity page there, you can see we started right here just after the futures had opened up. And then we sort of added to it, subtracted to it, morphed it around a little bit. We started with a butterfly trade right here. The market started to sell off, so we closed the put leg. And then here just a moment ago, before we started this video, actually, we added a new put leg down there. That trade right now, well, let's take a look at it. We can look at it in the risk graph. That's where we're at right now. The trade looks really solid right now going into the morning. It is just breaking into the profit zone right now, as you see right there. That's our P&L for the day. This is our P&L on our open position, but we took a debit on closing the original put leg. So we're basically, for all intents and purposes, right now at a break even. We've got about $560 of profit potential in the trade, $3,300 in the trade. I don't anticipate trying to take this all the way to expiration tomorrow, but I think that we have a decent shot at making a 10% return here, maybe 1 or 2 hours into the actual cash open of the day. Obviously, that's very dependent on what the overnight futures does, but it looks really solid right now. Pretty happy with that trade. It would be nice to start the day with a $300 or $400 profit right off the bat. We do have our Russell trade that is down to 19 days now. Russell's getting hit pretty good as well here, down almost 50 points in the futures market. As we know, the longer the term of the trade, the easier they are to adjust. So we might want to be maybe looking at an adjustment on this tomorrow. We've been in this for a while, and it has sort of bounced around quite a bit, but we do still have 19 days to go in that, and that gives us a lot of flexibility. Our DocuSign trade was the 100 shares that we got assigned at 185. We've been cash flowing these. We've cash flowed them quite nicely. If I do say so myself, I think it's roughly something around $500 that we have brought in. Roughly about $500 of cash flow that we have brought in on this transaction. And we'll continue to do that. We will continue to do a ratio trade here this week where we will overwrite on the call side. We'll add one more call to this, and then we will add a put on the downside. And again, our goal here is just bringing about $250 a week in cash flow, $1,000 a month, and that should get us right to where we want to be on this. We have talked about DocuSign. Whether it's up or down, it's moving almost 5 points a day, and so we need to get used to your daily P&L fluctuating by $500 a day, whether that's up or down. That's just kind of the ATR that this thing is working with right now, but it is working in the right direction. You know, we look at it here, and that's the big sell-off there from the earnings. There's our cost basis in the shares, the 100 shares, and it does look like it has A, formed a bottom, and B, is trying to give us a nice little buy signal here and try to work its way back up there. So continue to like that trade, and we'll continue to cash flow that trade. Our Microsoft trade is a trade that we've adjusted several times, and it looks really, really solid right here. It's obviously solidly profitable here, and it has still about $1,000 of extrinsic value or profit potential left in it for these positions that expire on the 12th. But we're still not in the overall profit zone on Microsoft in general from when we started that, when we initiated the first Microsoft trade. And so we need all of this $1,000 of profit and then some. But what I am interested in doing is seeing if we can just sort of leave this trade as is. You know, it's really well positioned right now in the trade. See if we could burn up these next 12 days, get that $1,000 of extrinsic value in there as well, and then start working that trade with a smaller buying power requirement. I got 13 grand tied up into the Microsoft trade. That's a little bit over position size for my account size. So I would love to, we need to continue to work this to continue to bring in cash flow, and I think that that's very viable, but I would like to do it with a lot smaller buying power, something more along the lines of $3,000 or $4,000 thrown at the trade rather than 13,000. So we'll try to work this trade through December 31st, get that expired, get all of our money back, and then we can start that all over again. Let's talk a little bit about what we've got coming up this week. It is going to be a busy week in spite of the fact, again, that it is a shortened trading week, a holiday week. Monday, tomorrow, December the 20th, we don't have any major news items coming out except for, as I said, China's loan prime rate lowered just slightly, 25 basis points. We'll see how that affects our FXI position. We will have a live Zoom session on Monday. We're going to be doing a 0 DTE on Monday. We're going to be working on the 4 DTEs. We're going to be redoing the Q trade. We're going to be probably adjusting our SPY trade. We're going to look at doing an IWM strangle. Once again, we've had a tough time over the last couple of weeks getting those in with a premium that would justify doing the trade at all. But I think that with the heightened IV that we have right now, we should be able to get that started as well. And then in addition to that, on Monday, we've got MU, we've got Micron that's reporting after the bell, and Nike that is reporting earnings after the bell. And so we will probably be trading those earnings trades post earnings. We did that all of last week, and we were batting 100% on all of those. Of course, you give up a little bit of IV when you wait for the earnings to already be announced, but we get a little bit better insight into the directional movement of it. So we've got MU and NKE, Nike, coming up with earnings on Monday. We'll be trading those on Tuesday. Tuesday the 21st, in addition to that, we don't have any major news items as well, but we've got a ton of trades on the docket for Tuesday. Beyond Micron and Nike, we've got a Roku trade that we're going to look at. We've got a CVS bear market trade we're going to look at. We've got a ton of our commodity trades we're going to look at putting back on. ZW, ZC, ZS, so the wheats, the corns, the soybeans. Those are going to be different iterations than we are normally used to. On the corn trade, we're going to look at doing a covered call. DGX, we're going to do a leap put right on that. Stitch Fix, SFIX, we're going to look at putting a trade together there. And we're going to look at doing a couple of dragonflies, a dragonfly on Amazon and a dragonfly on BA, on Boeing. And then in addition to that, we've got another bear market trade on SHW. So it is going to be a busy, busy, busy day on Tuesday. Wednesday, December the 22nd, we do have some news items coming out on Wednesday. We've got the U.S. GDP coming out an hour before the market opens. We've got U.S. home sales coming out, consumer confidence coming out. Both of those are half hour after the market opens, the cash market opens. We've got crude oil sales inventory numbers coming out 1 hour after the market opens. We always like to try to put an oil trade together in conjunction with that news. So on Wednesday, we'll be looking for an oil trade. We will be looking at a 0DTE on Wednesday. BlackBerry, ticker symbol BB, reports after the bell, and CarMax, ticker symbol KMX, reports before the bell. So we will be looking to trade both of those as well on Wednesday. So Wednesday will be a busy day. However, please note that we will not be in a live Zoom session on Wednesday. Normally every Monday, Wednesday, and Friday we do Zooms. This Wednesday my wife's going to go in for a little surgery. It's not a big deal. I think everything should be okay, but she is going under general anesthesia. So I need to be there with her. And I will take my laptop and we will be trading. We'll be in the chat room, but we won't be doing a live Zoom on Wednesday. However, Thursday, which generally is not a Zoom day, we will be in Zoom because we do have a 0 data expiration opportunity on Thursday. So we will be live in the Zoom session on Thursday. A lot of information coming out news-wise on Thursday. We've got jobless claims and durable goods orders, as well as consumer spending, all coming out an hour before the cash open. So those could be potentially market-moving items, news items. We've got a 0DTE on Thursday, as I said. And then Cronos, CRON, they report earnings on Thursday as well. So we'll be trading that as well. So we do have a lot of activity coming up this week. Again, just keep in mind that we will have a Zoom session tomorrow on Monday. We'll have a Zoom session on Thursday, but no Zoom session on Wednesday this week. So a lot of activity coming up for us, guys. We'll see you in the live Zoom session and the live trading room tomorrow morning. Thanks.